Learning objective 3, describe accounting for production activity and preparation of the process cost summary using weighted average. So we're going to be going into the weighted average method here, and we'll illustrate how it's done. So the process costing illustration, there's this company, Gen X, uses a weighted average cost flow system for the following effects. We determine the physical flow of the units, compute equivalent units of production. We talked about that. We'll determine the cost per equivalent unit, and then assign the costs and reconcile them. Because at the end of the day, we're just allocating costs that we, from an estimated basis, and then we'll have our actual costs, and then we'll reconcile. And the thought here, always remember with managerial accounting, we're looking a little more ahead with managerial accounting than we did in financial accounting. Because in financial accounting, we're always reporting on historical numbers, but in managerial accounting, we're looking ahead, where if you're to become a financial analyst, you have to predict what next month and next year is going to look like. And whenever we make a prediction, it's very rare for us actually to be 100% correct on that prediction. So those differences we have to reconcile so we can make better estimates for the future. And so here's an illustrative example of maybe Gen X company's operations. So we have this loading dock where materials come in, we store these materials. And this is a good illustration of what it would actually look like in a warehouse. We store materials here, then there might be an office of people working to manage inventory or to manage the employees manning the floor. This is where the employees might come in, there might be some controls in place to make sure they're safe. And then here we're making coffee. So where we have our employees on the production floor building out the coffee in all the different departments. We have a roasting department, blending department, and packaging department. And then we have our warehousing here where then we ship out our goods. And I know the picture might seem a little silly to you, but I've audited major publishers and major manufacturing companies. This is really what it looks like. Like I walk in to a major publisher and you'll see your entrance. You'll see the managers who have a door for the warehousing managers, and maybe the cost accountant who either here or in the center, and then you'll have a giant area of just production sorted by department, and then where you have a storeroom where it all comes in, and then when it all finishes, it goes into a warehouse where then it's all inventoried and then shot out. So this is a really actually good illustration of what it would look like in real life. And as an auditor, if you go into financial accounting, you actually get to audit those warehouses and count to make sure that these departments are all being allocated correctly. So on our process operations, the question is, how do we allocate all these costs? Right? We have costs here for employees. We have costs here for our support staff. We have our warehousing costs. We have all our material costs. How do we allocate that to the goods on the production line? And so we're going to use that, what we just talked about, the equivalent units of production. So we're saying here we had 120,000 units to be accounted for. There's a few formulas here I want you to memorize. Memorize that our total units to be accounted for are beginning work in process inventory and units started in the period. Memorize this, but also just think about it from a practicality standpoint of total units to be accounted for. Well, what do I need to account for? Oh, I should account for everything that I started with and everything that I started. I think that makes sense, right? Everything that I was in my inventory, my work in process inventory, everything that I started with, and everything that I started. So in this case, they started with 30,000 coffee packets, and they added 90,000 to their line of production. So when the beginning of the month, they had 30,000 here, and then during the month, they added 90,000. So we only in that month, we had 120,000. That's it in that department, 120,000. So that's all we can account. That's the total units to account for. Doesn't matter how much raw material we have. Doesn't matter how much finished goods are in this department. This is how much we started with, and this is how much we added to the process. That's always going to equal the total units accounted for. So make sure you understand this balance. Similar to the balance sheet, assets equal liabilities plus equity. Total units to account for is always going to equal total units accounted for. I know it's frustrating because it sounds so similar, but we need to memorize this, and that'll help you make sure you don't make mistakes on your tests and homework. What are total units accounted for? Well, that's going to be units we transferred out and our ending work inventory, work in process inventory, which that makes sense too, right? That, okay, what are the units that I need to account for? I need to account for units that we transferred out to our finished goods or for the next department, and then our ending work in process. And then this ending work in process will become our next beginning work in process for the next month. So this ending work in process will be 20,000, then we'll add the new units started and so on and so forth. But we only can transfer out and keep what we began with and added. That's the idea here. So memorize that total units to account for, how that's calculated, the beginning work in process plus units started in the period, and the total units accounted for, units completed and transferred, plus the ending work in process. And then the ending work in process, know this bigger formula, just our beginning plus what we started minus what we transferred out. And that should be simple enough, right? What is our ending, what's the ending amount of money you had? Well, you started with $10, or you started with $30, you added 90, and then you spent 100, right? That's always going to be your ending. It's always going to be what you started with plus what you added less what you spent. Same thing in this philosophy. So don't overthink it. The words, I've seen students get really lost in the terminology, but just remember the basics, right? What do you have now? Well, it's what I had at the beginning plus what I added less what I spent. And so then we have to look at, this is good from a units method. Okay, now we know how many units we need to account for. Well, how do we apply cost to these units? Well, we're going to say our direct materials are 100% complete, and our conversion costs are 65% complete. And so let's see how it's flowing here. Let's see. And this, you have these slides available to you so you can see these fact patterns. So they're saying here, percents of production, the exhibit is, they're showing it, the work in process inventory here is 100% complete. So we're saying, let's say this is coffee beans. We've applied all the coffee beans. There's no more direct materials to be applied after this fact. Even if we go to packaging, we're not going to add more coffee beans to the packaging. So we're going to say it's 100% done. But we still have 100% minus 65%, right? So our 35% of conversion costs remaining in this process inventory. And so we're going to add that to our units transferred out. So that 35% is going to need to be added from a conversion cost standpoint to this production line. And so our ending work in process inventory is going to have, is 100% complete with respect to materials, but only 25% with respect with conversion. So we're saying here, units complete and transferred out are 100% each, but then our ending process, we still need, we need a lot more conversion costs associated with it. We haven't done any conversion costs. And so we have to do 75% for this ending work in process. Units completed and transferred out, blending the department, are 100% complete with respects to both material and conversion. So the idea here is it's going to be different based on each line in the business, right? The beginning work in process, we've done a lot of conversion. We did a lot of overhead and direct labor. But this ending work in process, there was still a long way to go, while what we transferred out was fully complete. And so we're always going to do those estimates at every period. And that's going to be given to you. You don't need to determine these percentages. It will just always be given to you that our beginning work in process is 65% complete. Our ending work in process is 25% complete with related to conversions. So don't be worried about these percentages, where they're coming from. Just know that what it's telling us. It's telling us that the costs are 100% applied to this inventory, but we still need to finish direct labor and overhead of about 35%. And for the ending, 75%. There's still a lot of direct labor and overhead related to this ending work in process. The numbers here are just for illustrative purposes because we don't know the individual costs related to them. We'll go down that here. We'll figure that out here. And so we'll make this determine physical, we'll go through all the different steps from a different perspective now here. So determine physical flow of units. So we can see here, I like this illustration better, but it's just a different way to look at it. Our total units accounted for equal total units to account for here. So we have this format, beginning work in process inventory plus units started in the period. This number is equal to our total units to account for, and then total units accounted for, completed, transferred out. That's 100,000 here, and then the 20,000 is the ending work in process here. If you're a better visual learner versus narrative kind of learner. And then now it's going to give us, this is still our equivalent units of production. It says equivalent units of production is equal to the number total of units completed and transferred to the next department, plus the number of equivalent units in ending work in process inventory. And so what we're doing in this example is we're saying that, well, we know we completed and transferred out 100% of our direct materials and 100% of our conversion costs, right? That's where we see here. Units completed and transferred out 100%. That's where we're getting this example from. So 100%. So we know that we've done 100% of that out of 120 units. Then we also know, we see we've broken up from direct material and conversion costs, because direct material and conversion costs have different percentages, right? Our direct material usage is different than our conversion usage. So we have to break them out into two different columns here. And then our equivalent units for the ending work in process, which is what we have here, is different. We have 100% and 25%. So 100% for direct materials, that's 20,000 units, and 25% for a conversion, which is 5,000 units. So in this final transferred out and ending work in process, we have 120,000 equivalent units of direct material costs and 105,000 units of conversion costs. And so take that to the big picture. What's the whole point of this? We're just allocating the cost to this can, right? So we can say, oh, I know I spent $10,000 on aluminum this period, and that's my direct material. So I'm going to apply all $10,000 to these equivalent units. But maybe I spent $20,000 on conversion. And so then I would take the 20,000 divided by 120,000, that's our total units, and times 105,000. And so I'd apply that 17,500, right? That 105,000, because we still have 15,000 units left, which we need to allocate costs to. So I'd hold those costs to the next department or the next cycle. And so always we need to memorize these formulas. Equivalent units of production are the number of whole units completed and the number of equivalent units in the ending work in process inventory. Again, that's just right here. And then we'd apply these percentages to finish the equivalent units of production. So I could see quiz questions giving you these fact patterns of, they might say your beginning work in process is 30,000, your units started and completed is 90,000, your units completed and transfer out is 100,000. They won't give you ending work in process. So you'll have to know this formula to calculate it. So you just go 30,000 plus 90,000 minus 100, we get our 20. And then if I give you a harder question, that might be an easy question. A harder question would then be, tell me the equivalent units of production for direct materials. And then you'd have to say, oh, well, we know it's 100% here and 100% here. So 100% times 100,000 is 100,000, and 100% times 20,000 is 20,000. So it's 120,000 for direct materials. And then I might ask it for conversion as well. And we'll go through that. We just went through that calculation. So that's the way that we test it. It's actually, it seems complex, but it's relatively simple. We just go back to this chart. I think this illustration is great. And then you can jump between these two, come back to this recording, and you can kind of see how it's easily played out. These percentages will always be given to you. So as long as you can tie it back to that illustration, you should be set. A compute cost per equivalent unit. And so here they're saying kind of what I went through, but they're giving you some different numbers so we can play with it. So they're saying the costs incurred, these numbers will always be given to you. You just have to do the division. So 81,000 plus the 279, we get our 360,000 related direct materials. It's the same thought of the aluminum. So they said, well, we had $81,000 of aluminum at the beginning of the period. We bought 279,000 during the period. How do we apply it? Well, we know we had 120,000 equivalent units of production. So divide it by that. We get $3 per equivalent unit of production. So just like what I did before, that's the ultimate goal, is for us to determine, allocate these costs to each can of soda, right? So this would be like the final question. So maybe I misspoke before, like you determining equivalent units would be a medium type question, and this would be a hard question. If I give it to you on a midterm, this maybe be 1 out of 45 or 50 questions, right? I'm not going to give you a lot of trying to determine this, but I might, from scratch, what I might do is just give you these numbers and the equivalent units of production and ask you to do the division. Or I might make it two separate, a linked question where each step, where you have to figure out first ending work in process, then finished out the equivalent units, and then figure out the cost per unit. But they're all linked to each other, so you'd get credit for each score. Then conversion costs are the same. You'll be given these costs, and then we figured out the 105,000 units, and I'll let you do the division. The 485 divided by the 105,000 gets you your equivalent cost per unit. And now we know how much a cost of can of soda can cost, or for this, the package of coffee. Why is that useful? Well, now I know what I can sell it, the price I can sell it for to my customers, right? Beforehand, how the heck are you supposed to know what your profit is? How the heck are you supposed to know if you're even going to make a profit for a company? And I can't tell you how many companies I've worked with where they don't do this assessment, either from a service or a process standpoint. And then once we do the assessment, they realize, oh, wow, my cost per unit is $25 a unit. And I say, okay, so how much are you planning on selling the good for? Well, all my competitors sell it for $15 a unit. And I tell them, I said, well, then you're going to go out of business. You need to either cut your costs or find a different line of business. I had someone making a shoe company come to me and go through this. And it was a cool shoe company who they make green shoes. They're using 3D printers to make the shoes, and they're all recyclable, and it's very kind of cool, hip, eco-friendly shoe company. But then after we did a basic conversion analysis, it was going to cost $250 for a pair of shoes. And I asked her, well, what's your competitor selling it for? And she was trying to make it more of a regular, like kind of daily shoe for women. And she was saying, most women won't pay $250 a pair of shoes unless it's a luxury brand shoe. And so that became a problem. And so what do we have to do? We have to wait for the equipment to go down. Maybe we have to look at a different angle. But if you can't sell your product for as much as it costs, then you're in trouble, right? So that's why this is very useful from a business analysis standpoint if you're looking at manufacturing companies. But the theory is there that is important as well. Like, know the cost of what you're selling so you can make sure you're making a profit. And then at the end, we'll assign and reconcile the costs. And so here we know the cost of units completed and transferred. Well, we figured out the 360,000, or sorry, the 300,000. So we can go back. I think if we look at these slides in conjunction, it'll be a little easier to see this. So if we go here now, we can figure out, well, what's our units completed and transferred out? Well, we have 100,000 units, right? And that 100,000 units here times a $3 per unit for direct materials and $4.62 for conversion is 762,000. So now we know that this bucket is worth the 762,000. So we need to sell it for more in order to make a profit. And then we can also do that for our ending work in process inventory as well. We know that we have 20,000 units, but now we can apply the cost of those 20,000 units by equivalent unit. And so we can figure out those buckets and figure out maybe we'll make more of a profit with our ending work in process. And this can help us manage our company and determine, well, where are we going up? Well, our direct material costs have been going up. Does that mean we have to sell? Can our competitors have a better supplier? There's a lot of useful information here for a management assessment. So I never want you to think of accounting as boring, because this is how you make decisions, is how we determine the data. And if you ever want to become a manager or an executive, you have to understand how the numbers are produced before you can make a decision. And then here's a good summary of the information. And sorry, I'm drinking a ton of water, but I'm just talking so much. Cost of production. So you can see here the total cost to be accounted for and the total cost accounted for are both tied here. And then we went through, this is all of the costs we assumed, right? Cost to charge to production. So we know we spent 81,000 on direct materials. We know we spent 279. That will equal the total 360,000 of direct material costs, right? These numbers would be given to you. Oh, sorry, 1,000, 279, that's our 360. We know these are actual costs because they were given to us. 485, that's our 462 plus the 23,100 will equal the 485. And then we're applying these costs to all of our, based on equivalent units. So then we determined our equivalent units here. We went through all these steps, units to account for, units to be accounted for. We made our equivalent units of production. We determined the cost per equivalent unit, and then we assigned those costs and those costs will equal the original costs. And this will be the summary, and this is the kind of report you get as a manager to make sure that, okay, well, I know that all the costs that I was charged have now been properly assigned to my process. And then lastly, we'd maybe get this final summary of data, which is helpful. Or like, okay, here's how each of the costs broke out. So I think that I couldn't think of a better way to think through these costs other than maybe going back to this presentation, going back to this video, and then tying them back to this illustration. Because at the end of the day, just remember the big thought process here is, how do I assign costs to these buckets? Because I just don't know. I don't know how to apply them. And we're going to use this equivalent unit method. So all we have to do is determine the flow, figure out the equivalent units, compute them, compute the cost per equivalent unit, and then we're going to assign them and reconcile them. And that's what this process cost summary is doing. We've got the cost we charged, we have the unit information to make sure the total units to account for, the total units accounted for, equal each other, figure out that equivalent unit, go the cost per equivalent unit, and then reconcile that information out. And then we have this general cost data here that then can be used for management in more detail. So that's the most complex part of process costing. And then we're gonna go to the journal entries for all of this next. But these calculations is where the bulk of the work is. So if you can just kind of work through that flow and watch this recording while you do your homework, you should be set to go. So I'll stop here.